Yeah, good morning, everyone. So we are seeing across the board decline in international market. US market further came off on Friday, and even the futures are down. And in Asian markets are seeing sharp corrections, wherein few of the indices are down over 5%. Uh, what we had seen in the why the US, Japanese market is down so much is one of the reason for that is that they changed their policy and they started increasing interest rate, which led to decline in the which the resulted in appreciation of yen. And appreciating yen can have an impact on the corporate earnings. Earlier in last 3 years, uh, Japanese yen has consistently declined by almost around 40%, and that led to quite improvement in the performance of the corporate over there. So now going forward, Bank of Japan is indicating further rate increase also. And whereas on the other hand, US is indicating, Fed is indicating decline in the interest rate. So that will narrow the gap between Japan and uh, US rate, and that can lead to further appreciation of yen. And as such, market is factoring in decline in the uh, market is seeing decline in the Japanese equity market. Apart from that, US has also seen uh, some indications of slowdown happening in the US economy, with what we had seen on first that the uh, PMI came lower than expected at 46, whereas the last month it was 48, which was indicating that there is a slowdown in manufacturing. And even on the Friday, the unemployment data came lower. The non-farm payroll came in at 1,14,000 versus expectation of 1,79,000. And sorry, expectation of 1,85,000. And even the last month, they revised it down to 1,80,000. And unemployment rate increased from 4.1 to 4.3%. So that was indicating that the US economy is now slowing down. And that is, and whereas the interest rates are at peak, and Fed has not yet started the reduction of interest rate. So indicating Fed is behind the curve. So that has put some pressure on the US market, and the US market has corrected. So, taking clue from all these, even the commodities are also seeing corrections. If you see the oil is down by around $2.5 from the same time yesterday, from the Friday. And also aluminum and coppers are also indicating 1.5% decline. Whereas in China market today morning, iron ore is seeing 1% up and steel is seeing 0.5% up. So we are seeing a negative trend in the international market. Indian market is supported by domestic liquidity, but we will see some sell-off from the US, from the FII in today's, and what we had seen on the Friday as well. So we see today market may be seeing opening lower, and can see some pressure on decline side. I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. This is Matu. Today, the market is likely to open with a gap down opening. The reasons has been specified by sir itself, and we're likely to witness some selling pressure during a day. On the technical front, Friday we have seen that the Nifty somehow manages to maintain the closing above 24,700, which gives some sort of a cautious sign, but not shown any kind of a reversal on intraday basis as such. Now going ahead, since we are getting a gap down opening, the immediate support is listed at 24,400. Any move below that level will extend this sell-off towards 24,300 to 24,240 levels on the downside. Whereas on higher side, the resistance will be placed at around 24,750, you see 800. Any move above that level will only take down a Nifty back towards to 25,000 upper levels. Coming towards the Bank Nifty, we have seen on the Friday some sort of a sideways momentum after the gap down opening, but maintain a closing below 51,500, which gives a really bearish signal on the technical front as such. Now the immediate support lies at 51,000 psychological mark. Any move below that level will extend some sell-off towards 50,840 to 50,720 levels, whereas the resistance is placed at around 53,000. About that level, 52,400 can be tested on the high side. Coming towards the Fin Nifty, 23,200 and 23,000 are the two support levels we need to keep eye on it, whereas the resistance is placed at around 23,500 and 23,640. So the overall view on the market and both the indices, Nifty and the Bank Nifty, will be the cautious. We are likely to witness the sell-off, selling pressure into the market. Let the market settle down at their mentioned support levels. Till the time, avoid creating a major long positions. If you have any, please hold it with the strict stop losses. That's it from my end. I request Nero to take a call forward.
Yeah, thank you, Swati. On the derivative front, most importantly, there are a couple of things. 24,500 is a strong support area, but in the last couple of trading sessions, we have seen liquidation in this 24,500 strike put, and open interest has come down here. So that is a little negative. There is a possibility that if we close below the 24,500 levels, we can see further selling in Nifty, which can probably take it towards 24,200 or 24,000 odd levels, which are the next nearest supports post that. So yeah, today's closing is very important. We are going to open near this 24,500 odd levels and see where it goes from there. The VIX has increased in the last couple of trading sessions from 12.5 to about 14.5 now, which is a negative. Also, open interest has increased as well. So all in all, the signs are little negative. We can see some selling for today at least, throughout the day. Most of the stocks can be hit intraday. So look out for the same. From the stock specific front, we have seen stocks which are defensive in nature do well. So the likes of Granules, Divi's, and so some of the IT sector names are doing well. So we expect these stocks to continue to do well going forward. Yeah. So look out for the same. Yeah, that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. On SJVN, there is news that CCEA has approved investment of 5,800 crore for 669 megawatt hydroelectric project in Nepal. That's positive. Ashoka Buildcon has been declared lowest bidder for two projects worth 1,280 crores from MMRDA. So that's positive. And M&M Financial has given update for the month of July, where the overall disbursements were up 3% year on year. Business assets are up 22% year on year, and collection efficiency is stable at 95% versus last July 96%. On the result side, SBI result was in line with expectation. Advances grew 16% year on year and 1% sequentially. Bank has guided for growing at 15% in this year. Loan yield had declined this quarter and cost of deposits rose, resulting in 8 basis points contraction in NIM. NIM came at 3.22% versus previous quarter 3.3%. Bank expects NIM to be at current levels with plus or minus 10 basis points range. OPEX growth was flattish, just 1% year on year, and saw a sharp moderation with wage revision provisions behind the bank now. We think OPEX growth will provide an offset to NIM pressure in the current year. Lower other income and slightly higher credit cost resulted in flattish profits on year-on-year basis, and however, they declined slightly on quarter basis. Asset quality remains stable. We remain positive on SBI. Bank of India result improved. Advances grew 18% year on year, 3% sequentially. NIM also expanded by 15 odd basis points at 3.07%. As a result, profit grew by 10% year on year and 18% sequentially. Asset quality was stable. ROA remains at 0.7%, which has been the case in last 5 quarters as well. And that's the reason that the stock remains valued at just 0.8 times price to book, in line with closer to ROA. We remain positive from long-term perspective. Utkarsh Small Finance Bank result has declined due to deterioration in asset quality. Advances grew 25% year on year, 3% sequentially. Management has guided for 30% growth. NIM declined from 9.9 to 9.4% this quarter. Credit cost increased from the usual run rate of 2% in recent quarters to 3% levels in Q1. NPAs have increased with slippage ratio rising to 4.3% versus previous quarter 2.3%. So that's why we are negative in the near term. Thank you.
Good morning. Britannia Industries Limited posted the results and results were marginally below expectations. Revenue grew by 6% on a YY basis. It was largely based on a high single-digit volume growth. EBITDA margin reported at 17.7% versus the expectation of 18.5%. However, this is the overall operating margins improved over last year from 17.2%, and the stock is trading at a PE of 56.9 times to FY25 EPS. We will provide the outlook post the con call. Mrs. Bector's Food Specialities Limited posted the results broadly in line with expectations. Revenue grew by 17.4% on a YY basis, which was largely led by volume growth. The company has maintained its market share over the last 2 to 3 quarters, despite it has seen there was an increase in competitive intensity. Domestic business segments has seen the demand slow down over the last few quarters. However, quarter one has delivered the better movement. Gross margin stood at 48%, which is expected to be steady in the near term. Operating margin reported at 14.6% versus the expectation of 15.1%. The company has guided for the EBITDA margins in the range of 14 to 15% over the next 2 to 3 quarters, and it expects to enhance it further from quarter one FY26 onwards. FY25 capex guidance stood at rupees 350 crore. The management is finalizing the outlay for the future growth of which is expected to be announced in the next quarter. The stock is trading at a PE of 43 times to FY26 EPS. Also, the management has highlighted quarter two is expected to be better than quarter one. So we are long-term positive on the stock. On the chemical side, Asian Chemicals Industries Limited result was below expectations. Revenue grew by 38% on a YY basis, and operating margin reported at 33.5%, which is above the expectation of 30.5%. We will provide the further details post the con call. UPL Limited result was below expectations. Revenue grew by 1.2% on a YY basis. During the quarter, volume growth stood at 16%, and there was a decline in price by 14%. That was a key headwind for the quarter one performance. It expects the prices of key agrochemical intermediates to remain stable in quarter two and FY25. Also, in the international market, it has seen the volume growth of 17%, which indicates the market share gain. In terms of profitability, EBITDA on an absolute level, it has degrew by 28% on a YY basis, where EBITDA margin stood at 12.6% versus expectation of 13.3%. The company is focusing on the rationalizing the overall cost. It expects overall margins to improve on a sequential basis. The company has guided for the revenue growth of 4 to 5% in FY25, with EBITDA growth on an absolute level at 50%. The operating cash flow to be generated around $300 to $400 million. The key monitorable on the performance would be any adverse weather conditions for agriculture and any material changes in the commodity prices. So we are neutral on the stock, where the stock is trading at a PE of 14 times to FY26 EPS. Thank you.
Hello. Hello everyone. Good morning. there is one news regarding electric two-wheelers. Retail sales of electric two-wheelers saw a smart month-on-month rise in July 2024, uh, grew by 34% month-on-month and 96% YOY. This strong growth was expected as the now extended Electric Mobility Promotion Scheme 2024 (EMPS) was to have ended on July 31st, with electric two-wheelers buyer advancing their purchases decisions ahead of that date. However, on July 26, the government extended the EMPS subsidiary scheme by another 2 months till the end of September. So it's a positive news for electric two-wheelers. And Ola Electric July 2024 numbers are out. So month on month, Ola Electric grew by 39%, and Ola Electric market share is increased by 4%. So now it's around 39%, and Ola Electric YOY growth is around 85%. Thank you.
Apart from this, Sami Hotel came up with the numbers, and the numbers are showing improvement. Seasonally, Q1 is a soft quarter. Generally, we have a lower number as compared to Q4, which is the case with this quarterly result as well. If you see year on year, and last year number also adjusted to ACI acquisitions, the revenue grew by around 4% year on year, whereas EBITDA margin has shown substantial improvement, and it has moved up by almost around 400 basis point. Last year, same time it was 33.4%, and this year it has come at 37.2%. And that too mainly because of the ACI portfolio has shown smart improvement in the performance. The RevPAR has increased by 12%, and occupancy came in at 74% versus last year 72%. So good improvement seen by Sami. Stock is trading at around 11.5 time EV by EBITDA FY26, whereas most of its peers are trading above 18 times FY26 EV by EBITDA. So there is a good opportunity. So we continue to remain positive on Sami Hotel and recommend to buy this stock. That's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting gold and silver to pull back. Gold, one can initiate a buy around 70,100 and maintain a stop loss of 69,800. On upside, we are eyeing for 70,500 to 700. So one can buy on dips. Silver also, we are expecting prices to test 84,000 on the upside. 84,000, 84,500 is the level where some profit taking could be expected. But however, one can initiate a buy around 80 to 800 with a stop loss of 81,800. In crude oil, we had witnessed a major correction on Friday. So a pullback till 60 to 50, 60 to 80 is expected, whereby again selling pressure could be witnessed. So on downside, again 6150, 6100 is the level we are expecting on the downside. In natural gas, prices have closed below the support area of 165. So we are expecting prices to test 158, 150 on downside. So selling on rise around 165 is recommended with a stop loss of 170. And in metals, copper, if prices are sustaining above 795, then we expect prices to test 805, 8010 levels. So maintain a stop loss of
792, and in zinc prices are consolidating from 255 to 250. So for a pullback, one can buy with a strict stop loss of 250. And again, on upside 255, one can initiate a sell with a stop loss of 256.50. So that's it from us. Thank you very much.